All right, diving right in today, we're tackling commercial real estate investment, focusing on Bangkok. I mean, the city is just pulsing with opportunity, but honestly, it can be a bit overwhelming, right? Where do you even begin?
It's true. Bangkok definitely presents a bit of a paradox, this amazing potential. But at the same time, a lot of complexity for anyone looking to get involved. And that's exactly why we're here today. You've sent us this article, and our goal is to really break it down, give you those key insights without getting lost in the weeds.
Absolutely. We want to equip you with the knowledge to confidently assess whether commercial real estate in Bangkok makes sense for you. This article lays out 5 core areas we'll be exploring: location, current market trends, legal stuff you absolutely need to know, the types of commercial properties out there, and how to manage risk.
Perfect roadmap.
Hmm.
And there's no better place to start than with the age-old real estate mantra: location. It's essential everywhere, but especially in a bustling city like Bangkok.
It's true, location is everything. The article highlights Siloam and Sathorn, classic choices, often called the CBD.
Right, they're considered the heart of Bangkok's financial scene. Think towering office buildings, major corporations, both Thai and international, lots of activity in banking and finance. So if you're thinking long-term leases, stable income, those areas definitely make sense.
Then there's Sukhumvit, known for attracting a lot of expats and tourists. The article positions it as a prime spot for retail and hospitality ventures.
Makes sense, right? You have a mix of residents and visitors, creating this constant demand for shops, restaurants, hotels, from budget-friendly options all the way up to luxury. A really diverse demographic, which means a lot of different businesses can thrive.
And we can't forget about Rama 9, a district the article describes as rapidly developing. New condos and office spaces are popping up all the time.
Rama 9 is interesting. It's definitely a newer hub, drawing in businesses, especially tech and media companies. It has that modern vibe, a sense of growth potential. But on the flip side, it's still evolving, so the market can be a bit less predictable. And the article makes a really important point here. The right location ultimately boils down to your investment strategy and the type of business you're targeting. A boutique hotel owner is going to have different priorities compared to, say, someone leasing office space to a multinational tech company.
Absolutely. And the article mentions the varying land prices across different areas. It might seem obvious, but that's a huge factor for those financial projections.
It is. The land price index in Bangkok essentially tells you how desirable an area is. Higher prices usually mean more demand, more commercial activity, and that can translate to better returns. But, of course, you also need that initial capital. Knowing these variations is key for making smart decisions, aligning your investment with your budget, and ultimately maximizing your return potential.
So we've talked locations, but how do you actually determine if a specific spot will deliver a solid return? The article breaks it down into several factors. Foot traffic is the first one, especially crucial for retail.
Absolutely. More people passing by means more potential customers, more visibility, and potentially higher sales. This, in turn, can lead to higher rental values for retail spaces.
Accessibility is another big one. How easy is it to get there? Public transport, car access, all that. Especially in Bangkok, where traffic can be a nightmare.
Yeah, no one wants to be stuck in gridlock.
Yeah.
Access to the BTS SkyTrain or the MRT subway is huge in Bangkok. Properties near those stations are typically more desirable. And even though traffic can be tough, good road access is still important for some businesses that rely on deliveries or cater to customers who mainly drive.
Then there's the question of competition. The article suggests looking for areas that might be underserved in a specific type of business, rather than diving into an already saturated market.
It's a smart approach. Less competition can give you an advantage, leading to better occupancy rates and more flexibility with your pricing. But it's always worth asking why an area might be underserved. Is it lack of demand, or is there an unmet need your business could fill?
And the article stresses the importance of future development. What's in the pipeline, new infrastructure, big projects, what could boost property values in the long term. They talk about thinking 5, 10, even 20 years ahead.
Absolutely crucial in a city like Bangkok that's always evolving. New infrastructure, expansion of public transport, new commercial zones, all of that can significantly impact property values over time. Getting in early on areas primed for growth could potentially mean big returns down the line.
So, beyond just the broad location, what about those specific factors that influence a commercial property's value? Proximity to public transport is one we've touched on already.
Definitely a major driver of value. Easy access to the BTS or MRT makes a location more attractive, whether it's for employees, customers, or even residents in those mixed-use developments. And that higher desirability translates directly to higher property values.
And then there are the local amenities. Having good restaurants, shops, and essential services nearby makes a location more appealing to everyone.
It creates a more vibrant, livable environment. Businesses want to be in those areas to attract and retain employees. It's a draw for customers, too.
And then there's zoning, which might not be the most exciting topic, but it's crucial. You have to make sure a property is actually zoned for the kind of business you want to run.
Zoning is non-negotiable. It dictates what you can and cannot do on a specific piece of land. Imagine setting up a factory in a residential zone. It just won't fly. You have to check zoning regulations with the local authorities, the Bangkok Metropolitan Administration, to avoid any nasty legal surprises.
And, of course, the overall health of the Thai economy is a factor. That's going to have a ripple effect on commercial property values across Bangkok.
Absolutely. It's the big picture. A strong economy usually means higher property values and more rental demand. If the economy takes a hit, that can lead to a decrease in demand and potential price corrections. So keeping an eye on those economic indicators is part of being a savvy investor.
All right, let's dive into the market trends that are shaping things right now. The article mentions the tourism sector bouncing back, which is great news for shops and hotels.
Absolutely. As tourism recovers, we're seeing a real positive impact on retail and hospitality. More tourists mean higher occupancy rates for hotels, more foot traffic for shops and restaurants. All good news for property owners in those sectors.
Another trend is the growing tech sector in Bangkok, which, as the article points out, is driving demand for office space.
The tech scene is definitely booming. These companies need modern offices, often with specific tech infrastructure, which creates new opportunities in the office property market. Higher occupancy, potentially higher rental values, it's a good sign.
And mixed-use developments are becoming more and more popular, combining residential, commercial, and sometimes even leisure spaces all in one.
They're a big trend because they offer that convenient, integrated lifestyle. Residents have everything at their doorstep, and businesses want to be part of that vibrant atmosphere. It's a win-win situation, and that's reflected in the prices and rental rates.
And thankfully, the Thai government is making moves to encourage foreign investment, which could benefit the whole commercial property market.
They are. We're seeing more interest from international companies wanting to set up shop in Bangkok. This drives demand for office spaces, factories, warehouses, the whole spectrum. The government's doing their part with incentives like tax breaks and streamlining regulations. It all makes Thailand, especially Bangkok, an attractive option for foreign investment.
With all this activity, understanding the legal side of things is super important. The article stresses that knowing the rules is key to avoiding problems down the line.
It's not just important, it's essential. Navigating those legal and regulatory waters is fundamental to successful real estate investment in Bangkok. Knowing the laws is how you protect your investment and avoid those legal pitfalls.
Due diligence is at the top of the list. The article really emphasizes thorough investigation before making any commitments.
Due diligence is not optional. You need to scrutinize everything. Check the property's legal title, make sure ownership is clear, look for any existing leases or anything that could impact your rights, and be absolutely sure there aren't any legal disputes hanging over the property. A qualified solicitor is essential for this. They'll conduct thorough searches, review all the paperwork, and help you uncover any hidden issues that could come back to bite you.
Contract law is another area where the article advises caution, pointing out that things might work a bit differently in Thailand than what you're used to.
Don't assume anything. Thai contract law has its own nuances, its own ways of doing things. It's really important to get expert legal advice to understand exactly what you're signing, the obligations involved, and what could happen down the line. Protect yourself.
Environmental regulations are mentioned too, especially for developers. They can have a big impact on what you can and can't do with a property.
Environmental regulations are a real consideration. Whether you're developing or renovating, you need to know if there are any restrictions, any environmental impact assessments required, any conservation regulations tied to the property. All of that could affect your plans.
A big one for foreign investors is ownership restrictions. The article is clear: foreigners can't directly own land in Thailand.
It's a fundamental rule in Thailand law. But as the article explains, there are legal ways to gain long-term control and usage rights.
Leasehold is one way. They mention a typical term of 30 years, with options for renewal.
It's the most common way for foreigners to secure property rights. You don't own it outright, but a registered lease for 30 years gives you a lot of security. Just make sure you carefully review those renewal terms.
Another option is setting up a Thai company, which can legally own property. The article does mention that this comes with specific rules and regulations to follow.
It's a viable path, but it involves navigating Thai company law, shareholding structure, appointing directors, ongoing compliance. It gets complicated. You'll definitely need legal and accounting expertise to go this route.
For condos, it seems foreigners can own them outright, but there are limits on the total foreign ownership in any given building.
Correct. You can own a condo unit, but the total foreign ownership in the building can't exceed 49%. It's popular, but always double-check that foreign ownership quota before you buy.
Beyond ownership, the article explains zoning laws and compliance requirements. It stresses that zoning basically dictates what you can do on a piece of land.
Zoning laws are the backbone of urban planning in Bangkok. They define what kind of development is allowed in each zone. You can't build a factory in a residential area, for instance. Check the zoning with the BMA, the Bangkok Metropolitan Administration, before you do anything.
Getting building permits is another process that can be lengthy, according to the article.
It can be bureaucratic, lots of paperwork, approvals from different departments. Factor that time into your plans.
And compliance with building codes and safety regulations is a must to avoid penalties.
It's not just about following the law, it's about safety. Non-compliance can mean fines, legal issues, even dangerous situations. You have to take it seriously.
The article recommends getting expert legal advice and working with property consultants, which seems like smart advice.
Absolutely. Don't go it alone. Get legal professionals on your side, people who know the ins and outs of Thai law and the property market. They'll save you a lot of headaches and help protect your investment.
Now let's talk property types. Bangkok offers a diverse range, each with its own potential for returns.
It's a dynamic market, something for everyone. But you need to know the differences to make the right choice for your investment goals and risk tolerance.
Office spaces are popular. The article says there's generally consistent demand, especially in the central business districts.
That's right. High-quality office spaces in prime locations like Siloam, Sathorn, and increasingly Rama 9 tend to be in demand. They offer a reliable income stream, considered a moderate risk investment, with decent, if not spectacular, long-term growth potential.
Then there's retail, which the article says can be lucrative, especially in tourist areas.
Bangkok is a shopper's paradise. Retail properties in those tourist hotspots can generate good returns, but it's a higher risk game. Tourism fluctuates, the economy can impact things, but if you get it right, the long-term capital appreciation can be significant.
Hospitality, like hotels and service departments, is another popular option.
Driven by tourism and the expat community, hospitality can provide good returns, but it comes with higher operating costs. You're more vulnerable to shifts in tourism and the economy, so the risk is higher. Long-term growth really depends on the location and competition.
And lastly, we have industrial and warehousing, a sector that's seeing increased demand.
E-commerce is booming, which means more demand for logistics and warehousing. Properties close to transport hubs are in high demand.
When evaluating opportunities, location is key, as we've discussed, but the article also talks about rental yields. That's the annual rental income as a percentage of the property's value.
Rental yield is a way to assess profitability. It allows you to compare different properties and make informed choices about where your money will work hardest.
Occupancy rates are another factor. You want to make sure the property is rented out and generating income. Empty units mean lost revenue.
High occupancy is essential. You need to understand the property's rental history, the projected occupancy rates, and the overall demand in the area to gauge its income potential.
And then there's the potential for capital appreciation, the property increasing in value over time.
That's the long game. The property's value going up over the years can add significantly to your returns, especially in a growing market like Bangkok. Location, economic growth, infrastructure improvements all contribute to capital appreciation.
The article recommends getting a professional property valuation before you buy. Seems like a good way to get an accurate assessment of what it's actually worth.
It's essential. An independent valuation gives you an objective view of the property's market value so you can make sure you're getting a fair deal and not overpaying.
And when thinking long-term, the article says to consider the area's future prospects, any planned developments, and also factor in those ongoing costs like maintenance and property taxes.
The initial price is just the beginning. What's the area going to look like in 5, 10, 20 years? Are there infrastructure projects planned, new commercial developments? And don't forget those recurring costs, maintenance, taxes, insurance, they all eat into your profits over time. Those urban development plans by the city can really change the landscape and affect the desirability of an area, so staying informed is key.
The article provides a table with potential returns for different types of properties. For office space in the CBD, they suggest a rental yield of 5 to 7% with moderate risk and moderate long-term growth.
That aligns with what we see in prime areas. The returns might not be the highest, but they're steady. It's a stable income stream, a good option for those seeking moderate risk and consistent growth over time.
Retail and tourist areas could see higher yields, 6 to 8%, but higher risk and greater potential for long-term growth.
You're leveraging the tourist market, which can be very lucrative. But as we said, it's riskier, dependent on tourism trends, economic fluctuations. But if you choose wisely, you could see some really good capital appreciation down the line.
Service departments are listed at 7 to 9% yield, but also higher risk with moderate long-term growth potential.
Service departments cater to tourists and expats, offering good returns. But they're more expensive to run and manage and very sensitive to changes in tourism. Growth depends on location and competition.
Now, let's not forget about risks. Every investment has them, and Bangkok's commercial property market is no exception.
Every opportunity comes with challenges, and smart investors plan for them.
Market volatility is one of the big ones, linked to the global economy.
Thailand's economy is generally strong, but it's not immune to global events. Trade disruptions, financial crises, those things can have a knock-on effect on businesses in Bangkok, leading to less demand for commercial spaces, lower rents, and potentially lower property values.
Oversupply is another concern, with so many new developments happening.
Bangkok is seeing a lot of new construction, which is great for growth, but it also means potential oversupply in some sectors. More properties than tenants lead to lower occupancy and pressure on rental prices.
So how can investors mitigate those risks? Diversification is a key strategy.
It's essential. Don't put all your eggs in one basket. Invest in different types of properties, offices, retail, industrial, and spread your investments geographically within Bangkok. That way, you're less exposed to risk if one sector or area takes a hit.
Thorough due diligence and working with those experienced property consultants are also crucial, as the article mentions.
Absolutely. Due diligence is your protection. Thoroughly investigate every aspect of a potential investment. And again, those local experts are invaluable. Their knowledge and experience can guide you through the process, help you avoid costly mistakes, and ensure you're making informed choices.
Prudent financial planning is another point. Make sure you have enough cash flow to ride out any bumps in the road.
Don't overextend yourself financially. Ensure you have enough cash on hand to cover unexpected costs or periods of lower rental income. It's about weathering those storms.
Proactive property management is another important strategy to attract and keep good tenants.
Keep your property in great shape, make sure your tenants are happy, and address any issues promptly. Good property management leads to higher occupancy rates and minimizes those costly vacancies.
And of course, don't forget about insurance. Protect your investment against the unexpected.
Natural disasters, fire damage, liability issues insurance is your safety net. It provides that financial protection if something unforeseen happens.
The article talks about broader market volatility, too. Things like political instability, changes in government regulations, and fluctuations in the Thai baht. It even suggests looking at other asset classes for diversification.
Those are the big picture factors that can impact your investments. Political stability, regulatory changes, you need to be aware of them. And currency fluctuations can significantly affect your returns. Diversifying beyond real estate is another layer of protection against market risks.
It provides a table with potential risks and ways to mitigate them. For example, in an economic downturn, it suggests diversifying your portfolio and securing those long-term leases.
Right. If the economy slows down, having a diversified portfolio and tenants locked into longer leases can provide stability. You're less exposed to sudden changes in the market.
If there's a risk of oversupply, it recommends focusing on prime locations and differentiating your property with unique features or amenities.
In a competitive market, you need to stand out. Prime locations, unique offerings, high-quality amenities, those things attract tenants and help you maintain occupancy rates and rental income.
For regulatory changes, it advises staying informed and seeking legal advice when needed.
The legal landscape can change, so it's crucial to stay up to date on any new regulations.
Sure.
And if you're unsure about something, get professional legal advice.
And for currency fluctuations, it suggests hedging strategies or even financing the investment in Thai baht.
Currency risk is a real concern for international investors. Hedging strategies or taking a loan in Thai baht can help manage that risk and potentially limit the impact of exchange rate swings on your returns.
Now let's talk financing. Getting the right funding is crucial.
Absolutely. It's the backbone of most real estate deals. Mortgages are the typical route, But foreign investors in Bangkok might find local banks have stricter requirements.
The article emphasizes comparing interest rates, loan terms, and down payments across different banks and being wary of hidden fees.
Don't just jump at the first offer. Shop around, compare loan options, and read the fine print. Look beyond the interest rate. Consider the loan term, the required down payment, the repayment schedule, any upfront fees or penalties. Get the best deal possible.
Beyond mortgages, there are alternative financing options, like private lending, which can offer flexibility but often at higher interest rates.
Private lenders can be a good option if traditional bank loans are tough to get or you need more flexible terms. These lenders, often investment firms or individuals, may be more willing to work with you, but they usually charge higher interest rates to compensate for the perceived higher risk.
The article also mentions real estate investment trusts, or REITs, a way to invest passively in a portfolio of income-generating properties.
REITs are a great way to get involved in commercial real estate without the hassle of owning and managing properties directly. You pool your money with other investors, and the REIT handles the acquisitions and management. They then distribute a portion of their earnings back to investors as dividends.
Joint ventures are another option where foreign investors team up with local Thai investors.
A great way to tap into local expertise and capital. Local partners understand the market, the regulations, and they have established networks. It's a win-win.
Building relationships with local banks is strongly encouraged. They have that deep market knowledge and insights into financing and regulations.
Local banks know the market inside and out. They understand the intricacies of financing in Bangkok, the regulations that apply, and they can provide invaluable advice tailored to your situation. It's about building trust and working together.
And the article offers tips for working with local banks. Do your research, have a solid business plan, and be transparent with your financial information.
Banks want to see that you're serious and well-prepared. So research the banks, have a clear business plan that lays out your investment strategy, and be ready to provide detailed financial information. Honesty and transparency build trust, which is key for securing that financing.
Let's talk about the crucial role of property consultants in Bangkok. The article calls them essential guides, and I think that's spot on.
They are absolutely crucial, especially if you're new to the market. They're your navigators, guiding you through the entire investment journey.
Their market insight is a huge asset, knowing the trends, the emerging areas, the potential pitfalls.
They live and breathe this market. They know what's hot, what's not, where the opportunities are, and what to watch out for. Their insights can save you a lot of time and money.
They're also skilled negotiators, able to secure the best prices and terms for their clients.
They know how to get you a good deal, whether you're buying or leasing. They understand the market, they know the players, and they can leverage that knowledge to get you the best possible outcome.
And they save you time by streamlining the whole process, searching for properties, arranging viewings, dealing with paperwork.
They handle the legwork, the back and forth, the tedious details. It allows you to focus on the big picture, knowing that the practicalities are taken care of.
When choosing a consultant, the article says to look for experience in the Bangkok market, check their reputation, and ensure they're good communicators.
Experience is key. They need to have a proven track record of success in Bangkok. Check online reviews, talk to people who've worked with them, get those referrals. And communication is vital. You need someone who's responsive, who explains things clearly, and who you feel comfortable working with.
It goes through the entire process of how consultants help, from understanding your goals and budget to finding suitable properties, conducting due diligence, negotiating, and finally closing the deal.
They're with you every step of the way. They take the time to understand your needs, your budget, your investment strategy. They then find properties that fit your criteria, help you vet them through due diligence, and negotiate on your behalf to get the best deal. And they guide you through that often complicated closing process, ensuring everything goes smoothly.
So what about investment strategies for Bangkok? The article talks about the difference between short-term and long-term goals.
It's about knowing what you want to achieve. Short-term strategies like flipping properties or short-term rentals aim for quick profits. Long-term strategies are about buying and holding, generating rental income over time, and benefiting from that long-term capital appreciation. Your goals, your risk tolerance, your timeline, all of that will determine the right approach.
Diversification is a key strategy again, spreading investments across property types, locations, and even different investment vehicles.
Right. Don't put all your eggs in one basket. Invest in different types of properties, office, retail, industrial. Look at different locations, central areas, emerging suburbs. And consider different investment vehicles. Direct ownership, REITs, property funds. Spread the risk, maximize potential returns.
The article talks about identifying growth areas, looking for places with new infrastructure, improved transportation, government initiatives.
You want to get ahead of the curve. Look for areas benefiting from new infrastructure, like extensions to the BTS or MRT. Keep an eye on government initiatives, like those promoted by the Board of Investment, the BOI. These areas are likely to see growth, higher property values, and increased demand.
It also stresses continuous market research, expert consultation, and staying informed about the market's constant changes.
The market is dynamic, constantly evolving. You have to keep learning, stay informed, and consult with those experts. It's how you adapt and make smart decisions.
Let's move on to rental markets in Bangkok. The article mentions that trends can vary significantly by property type and location.
It's not a one-size-fits-all market. Trends for condo rentals, office spaces, retail units, they all differ. And location plays a huge role. Prime areas usually command higher rents. The post-pandemic recovery and the overall supply of rental properties also influence these trends. Even similar condos in different parts of central Bangkok might have different rental demands and prices.
What are the factors influencing rental yields? Location is a big one, as we've discussed.
Location, location, location. It's a mantra for a reason. Properties in prime areas, close to transport, business centers, popular amenities, they attract tenants and justify higher rents, leading to better returns for investors.
The condition of the property and the amenities offered are also important for attracting tenants and commanding those higher rents.
Absolutely. Tenants look for well-maintained properties, modern features, good amenities, air conditioning, parking, security, internet. Those things add value and allow you to charge a premium.
The overall economic conditions in Thailand and the level of tourism in Bangkok also play a part.
A strong economy and booming tourism usually mean greater demand for rentals and higher prices. If the economy slows down or tourism takes a hit, the rental market can feel it.
And, of course, the level of competition from other rental properties in the area will impact your pricing and occupancy rates.
You need to know what you're up against. Research the market, understand the average rental rates for similar properties, and see how many vacancies there are. It'll help you set competitive prices and attract tenants.
The article points out that tenant demand varies by sector: residential, office, retail. They all have different drivers.
Different sectors, different needs. Expats want modern, well-equipped condos in central locations. Office tenants prioritize accessibility, infrastructure, and the building's prestige. Retail tenants care about foot traffic, visibility, and the surrounding retail environment. You have to tailor your property and your marketing to the specific needs of your target market.
Government policies and infrastructure projects can also impact rental demand.
They can really shape the market. Policies aimed at specific industries or infrastructure improvements can make an area more attractive, drawing in both residents and businesses.
Looking ahead, what's the future of commercial real estate in Bangkok?
The outlook is generally positive. We're expecting more high-quality developments, office spaces, retail, hotels, further strengthening Bangkok's position as a business hub in Asia. Those big mixed-use projects are transforming the city, offering a blend of work, living, and leisure spaces.
And there are emerging opportunities in logistics, industrial properties, data centers, hotels, even luxury residential flats. The article even mentions potential for older shopping centers to be renovated and upgraded.
The market is evolving. The growth of e-commerce is driving demand for logistics and industrial space. Data centers are becoming essential infrastructure. Tourism is recovering, boosting the hospitality sector. And there's always demand for luxury living. Older shopping centers are being reimagined to offer more modern experiences.
But this influx of new developments also means increased competition. Owners of older buildings need to think about renovations or even repurposing to stay competitive.
The market is dynamic. Owners of older properties can't afford to stand still. They need to upgrade, renovate, or even consider changing the use of their buildings to attract tenants and stay ahead of the competition.
And the global economic landscape is a factor, with both opportunities and potential risks. Tourism is recovering, foreign investment is flowing in, but a global slowdown could change things.
The global economy is always a wild card. While the current trends are positive, a major downturn could impact demand and investment in Bangkok. Staying informed and adapting to those global shifts is crucial for success.
And it reiterates that the Thai real estate scene is in transition, so keeping an eye on those rental trends is more important than ever.
Bangkok's real estate market is dynamic, always changing. You have to stay informed, track those rental trends, and adapt your strategies to make the most of the opportunities and navigate the challenges.
The article ends with a table summarizing economic factors and their impact. Tourism recovery is expected to boost demand for retail and hospitality.
More tourists mean more shoppers, more people needing places to stay. It's a good sign for those sectors.
More foreign investment means more demand for office and industrial space.
International companies need places to operate, places to manufacture and distribute their products. Increased foreign investment is a positive sign for those markets.
And a global economic slowdown could have a negative impact, leading to decreased demand and investment.
A global slowdown would create uncertainty and potentially reduce demand across the board. Businesses might hold back on expansion, leading to lower occupancy rates and less investment activity.
So it seems like investing in commercial real estate in Bangkok offers a lot of potential, but it's not without its challenges.
That's a fair assessment. There are opportunities, but you need to be prepared, do your research, and understand the risks.
Thorough research, understanding the market trends, knowing the legalities, assessing the risks. Those are the key takeaways.
You have to do your homework, understand the market, know the rules, and be realistic about the risks. There are no shortcuts to success in this market.
And planning, consulting with experts, getting that local guidance, that's essential.
It's about having a strategy, seeking out those who know the market, and making informed decisions. It's a collaborative process.
So with all that in mind, what kind of commercial property do you think holds the most untapped potential in Bangkok over the next decade?
That's a good question. Given the rapid growth of the digital economy and the increasing reliance on data, I think data centers might be the dark horse. Strategically located data centers built to meet the demand for secure and reliable data storage and processing could be a very smart investment over the next 10 years.
That's a really interesting perspective. Thanks for joining us today and sharing your insights on Bangkok's commercial real estate market. It's been a fascinating deep dive.
It's been my pleasure.
And for our listeners, thanks for tuning in. Keep those questions coming, and we'll see you next time on The Deep Dive.